Hello everyone. Welcome to Sam's Summaries. This episode is a deep dive discussion into Sam Fury's summary of Chapter 4 from the book Crypto Swing Trading by Jide George. It has been created with the help of AI. The chapter is titled Exit Strategies and Trade Management. You can read the original post at samfury.com.
All right, so maybe you're just starting to dip your toes into crypto swing trading, or maybe you're looking to seriously level up your game.
Either way.
Either way, we're diving deep today
Absolutely.
into a topic that can make or break your success.
Yeah,
Exit strategies.
that's right.
We're cracking open Jide George's crypto swing trading and focusing specifically on his chapter on, you guessed it, exit strategies and trade management.
It's one thing to ride those crypto waves, but knowing when and how to jump off.
Yes.
That's the real key to maximizing your gains and avoiding those gut-wrenching dips.
Absolutely. It's not just about selling, it's about selling smart.
Right.
So think of this like you're a pilot, right?
Okay.
You don't just plan for takeoff.
No.
You got to have a solid plan for landing, too.
Exactly.
Yeah.
I mean, even a fantastic trade can go south really quickly if you don't have a well-defined exit strategy.
So true. Jide breaks this down into profit targets, stop losses, and really adapting to the ever-changing crypto landscape.
Right.
Let's start with those profit targets.
Okay, yeah.
That's the dream, right? I mean,
Yeah.
picture this. You're holding a coin that's pumping. It's going up, 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 and you think, just a little longer.
Just a little longer.
Just a little longer. Go just a little longer, and then suddenly it takes a U-turn,
Yes.
and you're left holding the bag.
Exactly.
So how do we avoid that?
Right.
Jide talks about resistance levels and Fibonacci extensions.
So resistance levels, you can think of it kind of like a ceiling, right? It's a price point where the asset has historically struggled to break through.
Okay.
So let's say, for example, a coin has had trouble moving past, I don't know, $50 in the past. You know, every time it gets close to that $50 mark, it just gets pushed back down.
Like it's hitting its head on the ceiling.
Exactly. So that $50 level would be considered a resistance level. Now, Fibonacci extensions, on the other hand, that's a little more complex. But think of it like a cheat sheet for predicting price movements. It's based on these recurring patterns, these mathematical ratios found everywhere in nature.
Wait, so we're talking like the spiral of a seashell or like the arrangement of petals on a flower?
Exactly. And surprisingly enough, these same ratios
Wow.
pop up in financial markets as well, and traders use them to try to project where prices might go next.
So by combining these two, the resistance levels and these Fibonacci extensions.
Exactly. It's like using two different tools to confirm the same signal. When those two line up, that's when you really want to pay attention. It suggests there's a strong possibility the price might reverse at that point, so it could be a good time to take profits.
Got it. So we're looking for that sweet spot
Yeah.
where our Fibonacci extension lines up with the resistance level. And that's where we start thinking about
Right.
cashing in some of those gains.
Exactly.
That's fast. I mean, who knew math and nature could be so helpful in the wild world of crypto?
Well, it's all about patterns, right? Finding those patterns and using them to our advantage.
Okay, so we've got our profit targets in sight.
Right.
Let's talk about the other side of the coin.
Yeah.
The not so fun,
Right.
but equally important part of this equation, stop losses.
Absolutely. We don't want to dwell on it too much, but we got to protect ourselves. Jide compares it to, guardrails on a mountain road. You don't necessarily want to hit them,
No.
but they're there to prevent you from going completely off a cliff.
So true. So it's not just about like predicting a market crash, it's about managing risk.
Exactly. And the thing is, the key to setting a stop loss is to be strategic about it.
Right.
You don't want to set it too tight, otherwise you might get shaken out of a perfectly good trade by a little bit of volatility.
Right. It's like getting scared off a roller coaster right before the big drop and then watching it climb back up without you.
Exactly.
Ugh, FOMO city.
Yeah.
Okay, so walk us through where we should be setting these stop losses.
Okay, so for breakout trades, for example, you typically want to set your stop loss below the breakout point.
Breakout point, meaning that level where the price finally breaks through, that
Yeah.
resistance ceiling we were talking about.
Exactly. Now, for range trading, which is basically buying near support levels
Okay.
and selling near resistance levels, you'd want to set your stop loss just below a recent support level.
Okay. But wouldn't a really tight stop loss, like really close to our entry point, wouldn't that minimize our potential losses?
You would think so.
Yeah.
But remember, crypto is volatile. I mean, we all know that.
Extremely volatile.
Those sudden price swings can trigger a stop loss prematurely, even if the trade is ultimately going to be profitable.
So it's all about finding that balance,
Exactly.
protecting ourselves from those catastrophic losses,
Right.
but also giving our trades enough room to breathe.
Absolutely.
Okay, so we've covered some pretty powerful tools for managing our exits, trailing stops, scaling out, all that good stuff. But now I think it's time to talk about the elephant in the room, or maybe it's more like the ape in the crypto jungle.
Okay.
Our emotions.
Oh, absolutely.
I mean, let's be real.
Yeah.
Fear and greed, they're the two big ones, right?
Huge.
They can either make us or break us as traders.
It's like,
Yeah.
it's like we've got this amazing plan, this roadmap to success, but then fear or greed jumps in the driver's seat.
Yeah.
And suddenly we're swerving all over the road.
Exactly. And Jide really dives deep into this emotional side of trading, which I think is so important because we can have all the technical indicators in the world,
Sure.
but if we're not in control of our emotions, it's game over.
Oh, yeah. 1 minute you're riding high in a bull market wave, feeling like you can conquer the world. And then the next minute, a little bit of red on the charts sends you into a full-blown panic.
Yes, it's happened to me, I'll admit it. I'm thinking, oh no, everything's crashing down.
Right.
Sell, sell, sell.
And then, of course, the price bounces back. And you're left there kicking yourself for
Yeah.
not sticking to the plan.
Ugh, the worst feeling. So what's the antidote to this emotional roller coaster?
Well, Jide talks about the importance of self-awareness. He suggests keeping a trading journal,
Okay.
not just for tracking your trades, but also for noting down your emotional state
Interesting.
at the time of each trade.
Yeah.
Like, how are you feeling when you entered the trade?
Oh, I
Were
see.
you excited? Were you fearful?
So we're basically trying to identify those emotional patterns, right? Those moments where maybe fear or greed is clouding our judgment.
Exactly. Because once you start to see those patterns, you can anticipate them and even prepare for them.
Yeah, so the next time I feel that urge to panic sell just because the market dipped a little bit,
Well,
I can say, wait a minute, I know this feeling.
This is fear talking.
Exactly.
Take a breath,
Yeah.
step back, and reassess the situation objectively.
Love it. So awareness is key. But I gotta ask, even with that awareness, even when we know we're being influenced by emotions, it's still so hard to resist those urges, you know?
Oh, yeah, it's a constant battle.
It is.
And that's why Jide emphasizes the importance of having a well-defined trading plan
Okay.
and sticking to it like glue, especially when those emotions are running high. It's like your anchor in a storm. It keeps you grounded.
So it's almost like creating a set of rules for ourselves,
Yeah.
a pre-commitment strategy
Yeah.
to prevent us from making impulsive decisions in the heat of the moment.
Absolutely. I mean, think of it this way. You wouldn't try to change a tire while you're driving down the highway.
That's a terrifying thought.
Right. You'd pull over, you'd assess the situation, you'd follow a plan.
Right.
Trading is the same way. You need a plan.
Okay.
And you got to stick to it, even when things get bumpy.
So we've got our awareness, we've got our plan, but what about dealing with those inevitable losses? Because let's be real, nobody wins every trade. How do we bounce back from those setbacks without losing our confidence?
That's where Jide's advice about focusing on the process, not just the outcome, really comes in handy. It's about shifting your mindset from this win-loss mentality
Alright.
to a learning mentality.
So instead of beating ourselves up over every loss,
Yeah,
we're looking at it as a learning opportunity.
exactly. Every trade, win or lose, is a chance to learn, to refine your strategies, to become a better trader. I mean, think of it like learning to ride a bike.
Okay.
You're going to fall a few times.
Yeah.
But you get back up.
Yeah.
You learn from those mistakes,
Yeah.
and eventually you're cruising down the street.
I love that analogy. So we're embracing the learning curve, we're focusing on continuous improvement. But how does this all play out in the context of different market conditions?
Right, because the crypto market is anything but predictable.
That's an understatement.
It's like navigating a wild, untamed jungle. You got to be prepared for anything.
So what are some of Jide's tips for adapting our exit strategies to different market environments?
Well, he talks about the importance of recognizing those prevailing trends, whether we're in a bull market,
So everything's going up, up, up,
exactly, or a bear market.
which is the opposite. Everything's down, down, down.
Unfortunately, yes. And your exit strategy should change accordingly. In a bull market, you might be more inclined to let your winners run, to ride that wave as long as possible.
But in a bear market.
In a bear market, you want to be much more cautious, taking profits sooner to avoid getting caught in a steep decline.
Okay, that makes sense. And what about Bitcoin?
Ah, Bitcoin, the king of the crypto jungle.
The big dog.
Jide emphasizes paying close attention to Bitcoin's movements because they often influence the entire market. Think of it like this. If the king is feeling under the weather, the whole kingdom gets nervous.
So if Bitcoin starts to show signs of weakness, we might want to rethink our altcoin trades,
Yeah,
even if they're still looking good on paper.
exactly. It's all about being proactive, adapting your strategies to the changing market dynamics, and not being afraid to adjust your sails when the winds shift.
Okay, so we've explored the philosophy, we've tackled the emotions, but now let's talk about the nuts and bolts of actually implementing these exit strategies, the rubber meets the road part of this whole process.
Yeah, it's time to put all this knowledge into action,
Yeah.
right? To turn theory into practice.
Exactly. So let's say I've done my homework. I have found a trade that aligns with my strategy, my risk tolerance, all that good stuff.
Right.
I'm ready to pull the trigger. What are those first steps I need to take on my trading platform?
Well, before you even think about clicking that buy button, take a deep breath and revisit your trading plan. This is your pre-flight checklist, right?
Okay.
Making sure everything is in order before takeoff.
Hmm.
So double check, does this trade still fit within your overall strategy?
Yeah.
What's your entry point? Where's your profit target? And perhaps most importantly, where are you going to place that stop loss?
Right. That all-important stop loss we talked about. Setting it strategically, not too tight, not too loose. Finding that sweet spot where we're protected, but also giving the trade room to run.
Absolutely. And once you've got those key parameters defined, you can start translating them into actual orders on your trading platform.
Okay.
So you're going to set a limit buy order at your desired entry point. You're going to set that stop loss order at your predetermined risk level.
Mm-hmm.
And then you're going to set a limit sell order at your profit target.
So we're basically automating the process, right? Taking some of the emotion out of it
Right.
by having those orders in place ahead of time.
Exactly. That way you're not constantly glued to the charts, second-guessing yourself every time the price moves a little bit.
Oh, that's a relief. I'm already feeling calmer just thinking about it. But what about trailing stops? We talked about those dynamic stop-loss orders that adjust as the price moves in our favor. How do we set those up?
Yeah, so luckily most platforms offer trailing stop-loss orders.
Mm.
And it's pretty straightforward. You basically tell the system, keep my stop loss this percentage below the current price, or keep it this dollar amount below the current price.
So it's like having this invisible hand that's constantly moving our stop loss up as the price climbs higher?
Exactly, like a safety net that's always rising with you, protecting your profits along the way.
Okay, love it. But what happens when things don't go as planned? What if the market takes a turn for the worse? Do we just sit back and watch our profits disappear?
Well, that's where it's crucial to stay vigilant.
Okay.
Keep an eye on the market conditions. Be aware of any news or events that could impact your trade.
So we're not just setting it and forgetting it. We're actively monitoring the situation.
Exactly. And if you start to see signs of a potential reversal,
Okay.
maybe Bitcoin starts to weaken or volatility spikes, you might consider tightening your stop loss.
So we're being proactive, adapting to the changing market dynamics.
Right. And sometimes, the best move is to simply exit the trade, even if it means taking a small loss. Sometimes it's better to preserve your capital.
To live to trade another day.
Exactly. And remember, every trade, win or lose, is a learning opportunity.
Right. We talked about that. Analyzing those trades, figuring out what worked, what didn't work, and using that knowledge to refine our approach.
Absolutely. It's all part of the process. And the more you trade, the more you learn, the better you become.
I have to say, this has been an incredibly eye-opening deep dive. We've covered so much ground, from the psychology of trading to the technical aspects of setting orders and managing risk.
And it all comes down to taking control of your trades, right?
Absolutely. Not letting the market control us.
Exactly. Being proactive, being disciplined, and always having a plan.
Well said. This has been a fantastic journey, and I'm feeling much more equipped to navigate the exciting and often wild world of crypto trading. Thank you so much for sharing your insights with us.
It's been my pleasure. And remember, the journey doesn't end here.
No.
Keep learning, keep exploring, and keep diving deep into the world of crypto.
And to all our listeners out there, thanks for joining us on this deep dive. We'll see you next time, ready to explore another fascinating corner of the crypto universe.
Thanks for tuning in to Sam's Summaries. If you found this episode useful, let us know with a like, follow, and share. Also, if you haven't already, be sure to visit samfury.com to get free access to all of Sam's original summaries. You can also get any of Sam's books and other exclusive content. It's all completely free at samfury.com.